Hello, in this presentation we will record a sales receipt in QuickBooks Online. Here we are we will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. The QuickBooks Online dashboard, we will be continuing with the Get Great Guitars problem. We will be recording a sales receipt. It's important to note what a sales receipt is in comparison to a related document, that of the invoice. The sales receipt is going to be representing the item that we are selling and payment happening at the same time, whereas the invoice represents the fact that we sold something and we have not yet received payment. Meaning we're selling something, in our case being guitars. We could also think of this as a service company where we would do the service and had not yet gotten paid. That would be an invoice that we would be sending out and expecting to be paid in the future. If we're getting paid at the same point in time, that would be the sales receipt, where we record the form of payment now and the related sales at the same time. So right now we're saying that we are going to be making a sale, in our case a guitar that we're selling. We're getting payment at that point in time. You can imagine us being in the shop. We're actually in the shop and we sold the guitar. Someone brought the guitar up, has the sticker price on the guitar, and it's going to give payment at that point in time. We're going to enter that transaction into the system here. To do that, we'll go up to the plus icon up top where most of our quick kind of transactions will be. We have the customers, vendors, employees, and other. We're looking in this case to the customers section and we want to find the sales receipt. So here is the sales receipt that we will be recording for this particular customer, recording the fact that a guitar is being purchased at the store, payment received at the same point in time. We're going to get this from String Music. So that's going to be our customer who we're selling the guitar to at this point. Remember to keep in mind everything that's happening as we report this form. So here's the form. That form means that we're receiving some type of payment. Typically going either to the checking account or into, in our case, we're going to put it into that uncategorized fund to be deposited later. The other side of this will be some kind of revenue. So we're going to select the drop down and we're going to look for String Music. We don't have one. So we're going to type in String Music and we will add String Music as a customer. So we're going to add new customer, String Music. We're not going to enter the details right now. We just have the name. Details would be this screen showing all the other information here. We're just going to keep the name. That's all we need to keep going. We then have the email address. Email address would be important if we were going to email this information to them, send an email. If we're going to print it, then we don't need it. We're not going to put it here. We have the billing address. Now the billing address and the address for our company are going to be important when we consider things like sales tax. So if we are not charging sales tax, if it's a service company, if we're not subject to sales tax, then the billing address may not be as important and we can move forward. If on the other hand we need to calculate sales tax as we do here on a guitar, it's going to be important to put this amount here on the address here, and then go through and set up the sales tax. The new sales tax, remember, will be set up so that the computer will try to calculate that. And in order to do that, you got to set up the sales tax. We have to say it's taxable for the item that we're selling. And we need some type of addresses so the system can know what the rate will be. So we're going to use this address. It's a California address here. And that should hopefully allow us to have the sales tax. Then we're going to say the date will be 01/16/21. We are working in the future, so January 16th, 2021. We're not going to have anything in the shipping information. The payment method we're going to say is going to be cash, no reference number. And once again, we're not going to put it in the checking account directly because we're kind of imagining we're getting it at the store here, and we're going to go to the bank at the end of the day and deposit not only this check but multiple checks, and therefore within our bank statement it'll be grouped with multiple checks. We want to group it in the same format so that we can then do the bank reconciliation at the end of the month, and therefore we're going to put this first into uncategorized funds and then go and deposit everything that's within the uncategorized funds to the bank, and in so doing group it in the same format within our system as will be seen in the bank. Then we're going to have the product down here, and we're going to sell a guitar. If we select the drop down, we'll have all of our items. Once again, these items are the service items that would be seen when we entered in the items. We had to go in and enter these items. If we had not yet entered an item, we can add one here, or we could select the items that we have. We're going to have a Wildcat, so that's the one we want. It's an Epiphone semi-hollow body guitar. It's going to be a quantity. We have one. We have the rate at 400, the amount 400 because it's 400 times 1, and then we have the tax. It's going to be taxable. Now the tax isn't showing up here yet. You have to be off the cell. So if I click off of it or I tab one more time, then it'll go to the next cell and we should see the calculation. So here's the calculation made. Now because this is just an example problem and I don't want to make it specific to a state, and I want to just make it somewhat even or a simplified numbers, I'm just going to change this to 5%. So our sales tax is going to be 5%. So if you're working in QuickBooks, you can't change it unless it calculates something, and then you can go in and change it if you want to at this point in time. So it's going to be 400 times 0.05. We're going to use $20. So we're going to use 20, and because this is not a problem based on the calculation of the sales tax, we just want to use a somewhat standard sales tax that and just get the concept of what sales tax will be, and you can apply that to any location. So we have the $20. So there's the 20. If we click off of there, it's going to say, hey, that's not what we calculated. We're going to say, yes, we want to keep the 20, and I'm going to tell QuickBooks that it is an example problem, and therefore they didn't do anything wrong. Their calculation was fine. So there we have that, and if we look at what we have so far then, if we think about what's going to happen, as I always suggest we do, to the financial statements when we record this, we know that the undeposited funds, kind of like the cash that hasn't yet been deposited, will go up by the full amount, the 420. We know that revenue will go up, some type of sales revenue, merchandise sales revenue will go up by the sales price, the sticker price on the guitar, which was only $400. The difference will be 20 that we'll have to do something with. That will go into a payable. We don't get to keep that. We are collecting it, not getting to keep it, however. Therefore, it's going to go into something like sales tax payable, which we will then have to pay some point in the future. There's also the inventory going down. We see the inventory item here, but it's not going to be going down by 400. That's what we're selling it for, not the cost of the inventory. It will go down by the cost. The system knows the cost. We're not going to put the cost on the sales receipt because we're giving this document to the customer, and we don't put the cost on the document we give to the customer. And but the system knows it, and this form will drive the inventory going down, and we'll see that as we look at the financial statements. And the other side is going to be the cost of goods sold, which will go up and bring net income down. Effect on the income statement then, increase of 400 revenue, but also an increase in cost of goods sold and expense. We don't know what that amount is. We'll take a look at it on the financials, but the difference would be the increase to net income from this form. So that is going to be this, and we're going to go ahead and save this item. It's also an item we may want to print out oftentimes, so I'm going to go ahead and print this item. So we're going to print, and here it is. I'm going to download it and save it, and it's going to go into our docs, so it's right where we want it to be. So I'm going to call it a date of 01/16/21, and it's going to be for or let's call it sales receipt string music, and we will save that, and there we have that. I'm going to close this out. We'll go back to the reports now and see what happens. So we save this. I'm going to close it. And let's go to the reports. So we're going to go to the reports on the left-hand side. Check our main reports, our financial statement reports, which will include the balance sheet. So let's go to the balance sheet. Here it is up top. And we're going to change the dates to the current period we are working on, 01/01/21 to 01/31/21. And then we will run that report. Here is the report. Now we put this into undeposited funds. So here's the undeposited funds account. It is increasing. We're at $20,920. That's money that we assume we have, that we haven't put it into the bank yet. So if we select that item, we're going to see here is our items here. And this one was the 420 right there. So if we select the 420, we can see here it's a sales receipt. If we select that, then we should actually see the sales receipt we created. I'm going to close this back out and go back to the report. The other side is typically going to be on the profit and loss related to that cash going up, that being revenue. So let's go to the profit and loss, check that out. We'll go to the reports, left-hand side. We're going to go to profit and loss report. And we're going to change the dates once again to 01/01/21 to 01/31/21, January 1st, 2021 to January 31st, 2021. That's the period that we are working on. We're going to open up the run reports. And here we have this item. We're going to say the sales then is sales of product income. Selecting that, we should then see that not 420, but the 400 sales receipt. Clicking on that. Why do we have 420 and not the 400? Because we're recording just the sales amount, the sticker price of the guitar in sales, not the $20 sales tax, even though we will be receiving 420. So let's close this back out once again, and we will then go back to the report, back to the report summary, and we're going to check out the other side of this, and that's going to be the $20 that's going to be in the sales tax. That's back on the balance sheet. So we'll go back to the balance sheet, reports on the left side here, reports. We're going to select the balance sheet, and we're going to change the dates once again to 01/01/21 to 01/31/21 and run that report. Once we scroll down, we now are looking for the liability related to that $20. So if we scroll down, we have the liabilities, the California State Board of Equalization. So if you're using California, it'll show that. If you're not in California, you're using something else, it'll have some other body that will be the collecting body of the payments we will be making for sales tax. We're going to select that item. Here's the information related to the sales receipt. So if we select that, we then will see our sales receipt once again. There's the $20. Going to close this and go back to the report once again, back to the report. Now there's the item that we didn't see was the inventory must be going down. So the inventory is going down. Here's our inventory. It's an asset account. So we're up in the assets. Here's inventory. We select inventory. Then we're going to say what happened to inventory. It went down by 320 from this sales receipt. So if we select that 320, we see no 320 on this form. Why not? How could this form be the cause of that 320 when there's no 320 on this form? And that's because it's being driven by this item. This item, when we enter this item, is going to have the 320 cost, and the sales price is all we're going to have here. So this form is driving the 320 inventory going down, although it's not on the form. Let's find where it is at. We're going to say this is a wildcat, so I'm going to close this out. We're going to go to the sales items up top. We're going to go to the product and services and scroll down and see if we can find that wildcat inventory item. When we entered this inventory item, we said here that it had a cost of $320. That's where it's pulling that 320 from. So now let's go to the reports once again, and let's see the last component on the profit and loss or income statement. Profit and loss is what it's called by QuickBooks. Profit and loss. We'll change the date once again to 01/01/21 to 01/31/21, and we will run that report. So the other side is going to be in the cost of goods sold. So sales went up by the sales price, which I believe was the 400, and then the cost of goods sold is going to go up. The expense related us to consuming the inventory in order to help generate revenue. If we select that item, we see the 420 right here, selecting, or the 320 right here, selecting that item. Then we see the same sales receipt. The same sales receipt here, that number being driven by, once again, this item. So I'm going to close that back out. The effect on net income, I'm going to scroll back up. We're going back to the report summary. And the effect on net income then is an increase of 400 for the sales price, an increase in cost of goods sold of, was it 320? The difference was the net increase in net income on our profit and loss or income statement.